Today, we're tackling the question of whether Bitcoin could survive an economic disaster like the Great Depression. I will first throw my assumption here is that Bitcoin wouldn't survive without taking a massive hit. In the event of a market collapse, Bitcoin would likely crash hard, but I think it would recover faster than many traditional assets. Bitcoin has been marketed as digital gold, a store of value that can protect against inflation and economic instability. However, this idea has been tested repeatedly, and the results show that Bitcoin is more of a speculative asset than a reliable hedge against inflation. Its price is driven more by market sentiment and speculation than by intrinsic value or utility. To understand why Bitcoin might struggle during a Great Depression-like event, we need to look at how financial crises impact asset liquidity and investor behavior. During the Great Depression, the financial system collapsed, causing a severe liquidity crunch. Liquidity, the ability to quickly convert assets into cash, dried up, making it hard for people to sell even valuable assets like homes or stocks. This led to widespread margin calls, where borrowers had to provide more collateral or cash to cover loans as asset values dropped. Bitcoin is one of the highly liquid, would likely be one of the first assets sold off in such a crisis. When investors need cash fast, they sell their most liquid holdings, and Bitcoin's speculative nature makes it vulnerable to panic selling. Everything in the market will have chain effect. For example, imagine you took out a loan from a bank and used your house as collateral. If the value of your house suddenly dropped, the bank might ask you to provide more money or assets to cover the difference. If you couldn't do that, you'd be in trouble. So during a crisis, those who are over-leveraged, meaning they've borrowed too much to invest, would feel the pain the most. If these investors held Bitcoin, they'd likely sell it off quickly because it's highly liquid. Liquidity is crucial during a crisis because people need cash fast, and Bitcoin can be converted into cash more easily than, say, real estate or art. We've seen this happen in recent market crashes. In 2020, when the pandemic caused a global economic downturn, Bitcoin's price dropped significantly as investors sold off their holdings to raise cash. The same thing happened during the market crash on August 1st. When liquidity is needed, Bitcoin is often one of the first assets to be sold, just like any of the stocks in the stock market. Although the possibility of the quick reaction of the market will dump the price of Bitcoin hard, however, I think Bitcoin's recovery would be strong for one key reason. It's now backed by a strong country and blue flag. This institutional backing gives Bitcoin a level of legitimacy and staying power that it didn't have in its early years. So while it might crash hard during a depression, I believe the Bitcoin game could continue for a while longer, thanks to this growing support.